I'm here with Sarath Singh Gupta, who's the head of Global Trade and Receivables Finance in India for HSBC, and Simon Constantinides, the regional head of Global Trade and Receivables Finance in Asia for HSBC. Sarath, we were just talking about the industrial structure of India and the potential for increasing volumes of exports and imports. Now, tell us how you practically do this in terms of trade finance and how you can finance these trade flows.
Yeah, that's an interesting question, Brian, because trade finance in India is a bit different from what we see in the developed world. Primarily because, as you would be aware, the natural currency that is used for world trade today is still USD, which is the most dominant currency, followed by Euro, etc. So that is what India uses for trading with the world as well. However, trade finance to be financed in USD, Indian banks do not have US dollar accounts, except a few very regulated accounts which the Reserve Bank of India allows.
Right.
So most of the trade finance in US dollars is actually financed offshore.
Okay.
So that's where sort of banks like HSBC, etc., come into play because of their presence on both sides of the trade, and they can finance this trade from an offshore branch of their entity. The Indian local banks are typically use funding from other banks, foreign banks, to do the trade finance for the Indian corporates in US dollars. And if you also compare the US dollar interest rates versus the INR interest rates, then the US dollar interest rates as of now are cheaper. So corporates want to borrow in foreign currency, US dollars or euros as the case may be, and they do it offshore, which is allowed in India.
Okay. And Simon, I mean, do you see this changing the situation at all? Clearly it's somewhat restrictive in terms of the trade scope that we have in other parts of the world, but not untypical for an emerging market.
I don't think we're going to see any dramatic change right now because it hasn't stifled trade. And I think if there was a need for monetary policy to drive increased growth, that might happen, but I don't think that's where the central bank wants to go. But I think one of the things is, these large multinationals get access to the dollars through the international banking community like ourselves. And at the same time, we help to drive the connectivity with those other markets. And so there's a natural opportunity for us to help those companies explore other markets and help to put the financing in place. So we don't find that our customers are struggling to get finance. There is the access to the US dollar financing that they need, although it is with certain restrictions. There are typically withholding taxes when financing offshore, although there are one or two tax treaties which allow them to keep the cost down as well. So right now I would say no, there's no restriction that's making it hard to finance and accelerate trade growth. I don't know if you would disagree with that or not, though.
No, I completely agree with that, Simon. I don't think there is a massive change that is expected. The change will come only once Indian banks branch out more globally and have access to more offshore dollars in their own balance sheets. That's when there is going to be a change. But as of today and in the near term, we don't expect things to change dramatically.
Okay, and what about the method of trade finance used in India? I mean, are they doing it with letters of credit, or is it more inclined to be open account trading?
I think, India does use the traditional sort of methods of trade financing or trade instruments. It is primarily an open account market, so most of the trade that it does with geographies that it is comfortable with and counterparties that it is comfortable with, and most of it is open account. There are, of course, there is of course a requirement for letters of credit in certain markets and with certain counterparties which are there. So the instruments that are used for trade in India are no different from what we see in the rest of the world.
All right. And I mean, is it possible to make it as smooth a process as it is in any other part of the world in terms of the time it takes to get done and for the various stamps you need for the documents and the sort of bureaucratic process?
I think the government is doing a lot to make it sort of as smooth as possible. It will take time. It is an emerging economy and things are being opened up gradually. As that happens, things will become smoother.
And Simon, we were talking earlier about the likely growth of India-China trade. Will that also be done in US dollars? Because China's busy trying to do a lot more of its trade in the local currency, in renminbi.
I think maybe 2 years ago we had an offsite with a whole load of clients, 3 years ago. And we talked about renminbi to these Indian clients. They said it'll never happen, it'll never happen. And last year we actually did our first renminbi trade. And I think it was probably the first one done in India. These things take time, but certainly as I think China's imports start to exceed maybe its exports, the buyers are going to want to trade in renminbi because they're going to get paid in renminbi. And so there's an education process that everybody's still going through. But I think depending on what Sarath was mentioning earlier, what the underlying financing costs are of renminbi versus US dollar is always a driver of what the currency of choice will be for the trading cycle. But I think we will see more in renminbi on the import side and potentially on the export side too. There are always the questions, well, if I receive renminbi and I'm in India, what do I do with the renminbi? Can I hedge that out? And that is an evolving process and it will take time. But I do think we know that renminbi is going to become not the #1 trade currency in any foreseeable future, but potentially the second largest trade currency or third largest trade currency. And we're seeing significant growth in that. So every market will take advantage, because if you don't, you might be a loser to another market and you become replaced as a provider or a buyer.
Okay, well, we obviously realize that India-China trade is going to be a big growing trade corridor, and we'll come back in a few minutes and talk about that and other trade corridors.